Morning. Hey, welcome to the 19th of June. Hope you're doing well today. It's a holiday for the markets, but Dave and I will find something to talk about here in just a few minutes. Before we do that, let's not forget that there's so many things in this world you and we have no control over. However, you can take control of your investment portfolio by knowing the amount of risk you have in that portfolio versus the amount of risk you should have in that portfolio. A lot of times, people have more risk than they realize and they don't really know how much they should have. Give us a call at 863-382-0037 to schedule your core retirement analysis. And with that, we got Dave coming up next.
Usually on there, 105.7 Line FM. Good morning, good morning, good morning. It's 8:41. It is Juneteenth today. That means our stock markets are closed, but elsewhere around the world they have another day. They have another name for today. It's called Wednesday, and that means your money is doing something. Let's find out what's going on with it with our friend Phillip Statler from Statler Financial Services in downtown Sebring. You're working today, Phillip. Hi, how are you?
I am, and that's what happens when you're going to take vacation pretty soon. So you need every day you got to get ready so that you can take a week off or so.
I got a question.
Yeah.
What's a vacation?
I know you don't get very many of them at all, but I try to take more than you for sure.
I got you. I'm going to be soloing, I know, for a little while in here in a few weeks. Let's back up to yesterday on the market because we were open yesterday and we had another pretty good day and the kind of day you kind of like to have. The Dow was up by 56 points. That was 0.15%. Standard & Poor's set a new record. It was up 0.25%, just $13.80 though. And the Nasdaq was up a rock-crushing 0.03%. 5.25%, but that was enough to get us to a new record as well. I mean, those are sustainable gains. You can actually look at that and say, oh, okay, things are not doing too badly on the markets, right?
Well, yeah, and it's kind of interesting because the VIX also jumped like 1.6% yesterday.
Yep. But it's still at $12.30 on the VIX. And I did a little bit of snooping at that because that looked incredibly low. I went through a chart on what the volatility index has been. We're at levels on the volatility index we haven't seen since 2017, if you want to see a really stable stock market. I was absolutely amazed when I looked back. I couldn't find anything under 12.5, dating all the way back to 2017. That's kind of a head crusher.
Yeah.
Of course, for the last few years, we've been so topsy-turvy. The VIX has been going absolutely crazy. So, but still, we start talking about 7 years worth of difference and it's been this stable. That's kind of cool. Like I said, the markets are closed today because Juneteenth is a holiday on the stock market, but they're trading stocks and they're raising cane overseas. And probably my biggest single bit of information that came out was the fact that the UK over in Great Britain, they've got inflation whipped. Their monthly report has inflation over there down to 2%. I got to believe the politicians are going to be raising some cane on that, saying, why can't we do that, Mr. Biden?
Exactly. I mean, they've been able to accomplish that. And it wasn't that long ago. You and I were talking about them, dipping into a recession, but yet they've been able to get inflation down to that 2% target. And we're still not there. And so you got to wonder what it's going to take for us to get there.
It's one of the things, and this is not making a political statement at all, but the unitary parliamentary form of government that they've got over in Great Britain allows for a little bit more coherent economic policy, and it does make a bit of a difference. I mean, the fiscal policy in Great Britain, it's been unpleasant. The opposition over there, the Labour Party, is campaigning on the notion that times are hard, times are tight, people aren't getting wage increases, everything stinks. But it's the tight money that they needed to do in order to tame inflation. And now the Bank of England is talking about a rate cut, and they're saying probably not while we're in an election season, but as soon as the election over, now they're starting to plan rate decreases and easier money. And I think probably the coherency of a unified government, all under the Conservatives or all under Labor, you get a coherent economic policy. They can actually control things a little easier than our split form of government that we've got here, where we fight over everything like the way the doorknobs turn on the restrooms.
Well, and that could be, but let's dig a little deeper, Dave, because if we dig a little deeper, it's not such a pretty picture. Their core inflation, their core CPI is actually up over 3.5%, and their services, their CPI for services is almost 6% inflation.
Whoa!
Yeah.
So the overall top line number is under control, but they don't have the rest of it done.
Yeah, they don't have the rest of it. Yeah.
That kind of mirrors us too. Remember, when we talk about the top line number, I mean, we get down to the 2.7, 2.8, 2.9%. We say there's progress. Then we get the core numbers, and the core numbers are still over 3 on our side of the pond as well. So that's kind of an endemic situation worldwide, it sounds like.
Well, that's right. And let's face it, Dave, as long as we continue to see wages increase, and the minimum wage is set to increase automatically over the next several years, that's automatic wage inflation. And the DOL, Department of Labor, actually came out and put in new rules in place now, effective July 1st. Salaried employees that don't have to qualify for overtime, they've raised that significantly this year, like by probably 20%, what you have to pay somebody for them not to have to qualify for overtime. And January 1st, that number is almost 80% more than where it is today for somebody to qualify to not be treated for overtime wages.
Whoa.
Yeah. It's like you got to pay them like over $58,000 starting in January to qualify as an exempt employee for overtime purposes.
Wow.
Yeah, exactly. Exactly.
I got a bunch of snarky things to say about the workplace here on that, but I'm just going to let that one sit on its sit on its hands. Other news out this morning: we are still dumping data out of the government and the major companies and whatnot. The Mortgage Bankers Association put out their weekly mortgage update. I was kind of surprised at the mortgage application index was only up 0.9%. However, the prevailing 30-year mortgage rate just dipped under 7% for the first time since March. I'm going to assume sometime over the next 2 weeks, we're going to see a pretty substantial increase in the MBA mortgage application index.
Probably so. And let's think about why that is. And I think it may come back to supply and demand, Dave. People, let's face it, houses are not moving near as fast as they were. So we're seeing prices come down. I know in my neighborhood, I'm seeing prices fall significantly because deals are falling through. Deals are not living up to the appraised value. They're way over price. And so we're seeing those things come down and have an effect, which then mortgage rates go down because nobody's using them to buy anything. So between those two things, we may see a bump in mortgage applications and housing sales.
And that makes perfect sense. I mean, the economists would tell you it's cyclical in the process. We have a little bit of a real estate bubble that happened over the last few years, and eventually things will either level off, kind of like we talk about price-earnings ratios on the market itself. Things will either level off and go flat for a few years until demand and money catches up with it, or they're going to decline by a little bit. And you're not alone. I've got a friend that we kind of compare notes on Zillow, and he's been singing the blues because his house has been decreasing in value too. Mine's a little on the smaller side. It's still going up. But, tale of two cities there. Real estate is starting to go through that cyclical shift. And your point's taken. It might just be that nobody's applying for mortgages because things are in a state of flux.
No, exactly. So, and that's one of those important areas when we look at the economy and how it's moving is the real estate market.
Absolutely. And that means that, in terms of market as it goes around here anyway, entry-level homes are still pretty safe, but larger homes are starting to see at least a flattening effect and maybe a decrease. Other stuff out of the market from yesterday: who's the biggest company in the nation? Apple? Mm-mm. Microsoft? Mm-mm. It's our dear friends from NVIDIA. Boy, it's amazing how a video chip can make you millions, huh?
Exactly, man. It's crazy what that chip's done. You look at a 52-week chart, and it's done nothing but skyrocket.
It's amazing to me when you consider the fact that maybe 5 years ago, about the only people that had ever heard of NVIDIA were us computer geeks that messed around with them as a hobby because they were a high-end video maker, and you didn't buy that unless you were a heavy-duty gamer. Now all of a sudden they're worth more than Apple at close to $3.5 trillion. That just absolutely amazes me.
Yeah, it is. It is really crazy what's happened to that stock. I mean, I was just trying to pull up a chart here real quick to just like and now they've done the stock split, right? So the number I'm going to give you is in today's dollars, but the 52-week range is $39.23 on the low side to a high side of yesterday of $136.33.
Crud, they're going to have to split stocks again. It's amazing. On the other side of the Magnificent Seven, Amazon has just got whacked with a $5.9 million fine out in California. It seems they didn't bother to tell their warehouse workers that they had a work quota or get fired, and California does not like stuff like that. So Amazon's kind of taking it on the chin.
That's
they can take it out of the. Yeah, it comes out of the coffee fund in the executive suite, but still, it's PR issues anyway. Any other tidbits you got floating around the world this morning?
We talk about electric vehicles, and we talk about different systems, and I got this headline: solar is growing faster than any other electricity source there is, as big tech starts to look for clean energy to supply their data centers. Because data centers, with all those computers, those things eat up a lot of electricity.
You get the high-end ones, what your laptop does is peanuts, but take those big high-end NVIDIA-powered computers, and they eat a lot of electricity.
Well, you got to keep them cool. You got to keep them cool. So,
and the air conditioning bill will cream you too. Solar's growing. I mean, you and I were babbling about solar around here. It's still on the consumer, horizon as far as common usage. But I've got half a dozen homes on my block that now have solar power arrays on top of their roof. I haven't talked to my neighbors how happy they are with them, but seeing them now getting into the wholesale thing, powering data centers that are eating up power like chiclets, that's kind of an interesting trend. It's not a bad field to be invested in at this point if you've got one of the companies that's staying afloat.
Well, that's right, because we got what did you say, 2 that filed bankruptcy the last week or so. So there's still some price issues, I think, when it comes to solar. When you do the math, it still takes a lot to justify some of the solar expenses, and then making sure that you get enough to cover your whole house. I mean, there's still some issues that have to be worked out in solar.
Yeah, it's kind of why I talk. I've got one of my advertisers is the local company, and I've always said, number one, the national companies that are in trouble are the ones that are getting in the panels out of China. Local company sells American-made panels, which gives them a more stable supply. But also, when they look at it, the companies, that takes a lot of panels in order to supply 100% of what a company does. My roof is pretty well covered with solar panels, and it was because I rated my system up to do what I wanted it to do. It's going to be interesting watching it happen as it shakes out in industry.
It will be. And so, I see it on both ends, the investment end, and I see it on the tax end, people trying to get tax credits for their solar. So it's definitely still something that's out there. It's just something that people need to look at really close to make sure that they know exactly what they're getting.
And that's really the trick. Know what you're buying when you look at it if you do it residentially. Resetting the table, 2 records on the S&P and the NASDAQ yesterday. The Dow also grew. We aren't trading real money today, but the futures market has been busy overnight. How did we do so far anyway?
It's not budging much right now, Dave. We got the Dow is down, I don't know, less than 0.1%. S&P 500 is up 0.1%. The NASDAQ 100 is up 0.25 right now as we get ready to start. The big things are really on the other side. We got silver down about 1/3%. Gold's up about 1/10. But the killer is oil. Oil's up 1/3%, well over 80 to $81 a barrel right now.
Well, crap. Where'd you get that rumor about $60 oil you mentioned the other day?
That's in 2025.
Oh, shoot. Okay. Overseas markets, like I said, it's a holiday here in the States. Overseas, they just call it Wednesday, and that's what the Asian Rim and Europe are doing. Asian Rim markets were pretty much on balance flat, but there were some wild swings. South Korean markets way up, mainland Chinese markets off by about 1%, at 6 a.m. this morning. Over in Europe, they're kind of doing what happens over in Europe when we have a holiday, because we're still the 500-pound gorilla. Things are drifting downward on Europe, on balance by maybe 0.09%. We aren't moving much over there on a light trading day in the European community. Just because they aren't trading on the stock market today doesn't mean your money isn't moving, and that means your retirement may very well be being affected. How do I get a hold of you in order to plan a retirement I can count on, Phillip?
Dave, it is all about planning to retire right. And so that's why I developed the core retirement design, to help people design that retirement they always dreamed of. They can give us a call at 863-382-0037 to schedule their core retirement analysis. And they join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And back here tomorrow morning with an active market ahead of us here on Light FM. Thank you, sir. I'll see you then.
All right, man. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Have a great day. I look forward to speaking to you again tomorrow. Take care. Bye now.